Hey, we're going to get rolling here this week. And last week I was out of the office the last few days as we had our county fair going on. And I got to tell you, I just think county fairs are absolutely awesome. And our county celebrated its 100th anniversary this last year or this past week. And so that was great. But I just want to share a quick story for you. A friend of mine was telling me at the fair that, you know, like parents have projects with their kids. He had a turkey project and he had 15 turkeys out in the pen. And one night a fox got in there and killed 6 of the turkeys. And he thought he got that pen all fixed up and the fox wouldn't come back. And the next night, the fox killed the rest of the turkeys except for one. Well, that one turkey that ended up surviving ended up being a grand champion turkey at our county fair. So, I mean, I just think that's pretty cool and wanted to share that with you. But let's move on to the markets in here right now. I just want to bring up a weekly bean chart. This goes back to 2019. And what I'd like to point out here is that we had a low just above 780 in 2019. And our high in 2022 was 1784. So we had more than a $10 rally. Those colored lines on this chart are retracement levels and where we could potentially pull back towards. And as you can see, these different colors on here right now, and the 50% retracement, the one about in the middle's at 1282. Now let's just look here at a November bean chart, and I put those same colored lines in here. The red one at 1402 is tough to see because that's where the market's at right now. But as you look closer at this November bean chart, you can see that 1282 level is essentially what held us in here on this recent pullback. And if you look at the upside target in here, that top green line is up at 1547. Now, when you take a step back on here, if we break through the 1282 level, everyone say, well, maybe we can head down to 1164. Right now, as we sit here, we think we're going to have more of a range develop on this market. And that's where we remind end users who've got to look at buying some meal, don't get too bearish on breaks. But on the other hand, as a producer, don't get too bullish on a rally. When looking at this chart as well, this is why this past week, when we saw a big rally in the market, we put together a short webinar on saying, hey, consider a fence position. And when we put the fence position in place, we were having a 1430 floor price and a 1550 ceiling on those short dated options. The reason why we would like targeting that 1550 level as a ceiling is we go back to this retracement level where there's major resistance. We just think things have got to get extremely tough out there on the countryside, really declining crop ratings in order for us to go back above 1550. Our best guess right now is this range trade, call it 1275 to 13 and a quarter on the downside, 1475, 15 and a quarter on the higher side. We think that's going to hold in here as we push ahead for the next month. Getting to the corn market, we did the same thing going back to 2019. You can see we've got more than a $5 range the last couple of years, and throwing some retracement levels on here. Key 50% retracement level comes in at 563. Doing the same thing in here on the December corn chart like what we did on November soybeans. Look at that 563 area has been an area that has held support on D's corn on the previous 2 breaks. Resistance comes in at 6 and a quarter. You know, you could call it maybe up to 650. I think it's going to take something special though for us to get that sustained move pushing to that $7 resistance level. On the contrary, if we do break lower in here, you could see a breakdown to $5 where the next layer of support is. The thing we need to keep in mind on corn though is we believe it's really tied to the energy market. And we want to look at a crude oil chart here. And this crude oil chart goes back the last 15 years, but we're just trying to put some crude oil ranges on how they may correspond to corn. Right now, we've got crude oil just below $100 a barrel. If we get crude in an $80 to $100 range, we think that's going to correspond with a corn price, call it 5 and a quarter to 6 and a quarter. If crude oil goes above $100 and we're more in a 1 to 120 range, we're probably looking at 6 and a quarter to 7 and a quarter corn. We don't see corn really going below the 5 or 5 and a quarter level unless crude oil gets a sustained move below $80 a barrel. We think the corn market will closely follow the crude oil market in the big picture, and this is a chart we like looking at to help take us a step back and look at the big picture on what's going on as we move ahead. If you have any suggestions on upcoming webinars or want a specific topic discussed, please let us know. Have a great day.